discuss the fundamentals of the market. So let's get going. Gautam Baid, equity advisor at Complete Circle Stellar Wealth PMS, joins us now. Gautam, good morning. Thank you so much for joining in. And you know, we are speaking after a long time and at a time when there's so much happening. Globally, in India as well, we are talking about state election results coming through. We are talking about geopolitical tensions in West Asia, and we are talking on a day where we are seeing some green on the screen after 6 days of consistent decline. How are you looking at Indian markets right now? We have been talking about elevated valuations. And what about this big China versus India debate?
Sure. So, hi Sonal, hi Rima. Thank you for having me on your show. We are witnessing a phase of very heightened volatility across global markets and the Indian markets, primarily driven by a host of global and domestic factors. On the global front, you have the US presidential elections scheduled for next month, the outcome of which is highly uncertain. And you also have the tensions in the Middle East, because of which we have had a sharp rise in the oil prices, which in turn has tempered expectations of a sharp rate cut by the Reserve Bank of India. On the domestic front, you have had SEBI clamping down on the FNO segment through a series of regulations. They have also included the SME stocks under ESM that has further dampened sentiment. Add to that expectations of a soft quarter two by quarter India, and the result is the recent sharp sell-off which you have seen, which has been further heightened by the rotation away from the Indian markets to the Chinese markets. We have seen FII selling of almost 50,000 crores in the last 1 week itself, which is a very large number. So we have to carefully observe the trends over the next few days and weeks to understand whether this has become a sell-on rallies market or whether we bounce back to all-time highs after this recent sell-off. So this is the time to be a risk manager and to focus on portfolio construction. Focus on those stocks with very strong earnings visibility and which have got sectoral tailwinds, because once the mid caps and the small caps stabilize, those will be the stocks to bounce back to all-time highs. Whereas stocks with highly leveraged balance sheet, bad corporate governance, negative operating cash flow, those stocks will struggle to recover back to all-time highs. So be very focused on the quality of your portfolio at these times.
Gautam, what's your own gut? But are we in a prolonged period of a downturn, maybe some price time correction, or do you think we bounce back very quickly to our all-time high levels? Your own, gut feel and view about this.
I think a bit of time correction for the next few months would not hurt, Rima, because the rise has been very swift and sharp. If you look at the rise in the various indices since the COVID bottom, the Nifty had gone up more than 3 times. The mid-cap index has gone up more than 4 times, and the small-cap index has gone up more than 5 times. So we have had very large amount of gains in the last 4.5 years. So, undergoing some time correction and just consolidating around these levels will be pretty healthy for the market. So from here on, it will be more of a stock pickers market. And I think, just investing based on broad-based themes will not work going forward.
Okay, so let's get to those, stock ideas. I know you're a big fan of Capital Marketplace because in the past you'd recommended even Bombay Stock Exchange. And today you're looking at Nuvama Wealth Management. So why Nuvama? Because there are peers in the listed space. So you've got something like Anand Rathi. So tell us why you've selected Nuvama.
So Nuvama Wealth is a structural long-term play on the financialization of savings theme in the Indian capital markets. And the company operates through 3 segments: wealth management, asset management, and capital markets. And the focus of the management is to grow the share of annual recurring revenue and asset income in the long run. The company has guided that asset management and wealth management will constitute 75 to 80% of the earnings in the long run. And because these 2 segments are much more less cyclical compared to capital markets, the quality of earnings of this business will improve over time, and that will lead to valuation re-rating. Also, this particular company is currently trading at a trailing P multiple of 29 times, which is at a sharp discount to its other listed peers like Anand Rathi, which you mentioned. That's trading at a trailing P multiple of 66 times. 361 Wealth Management is trading at a trailing P multiple of 40 times. So Nuvama Wealth Management, with a equally good or superior earnings growth profile, should benefit from valuation re-rating even from the current levels, even though the stock has had a sharp run-up recently. The key risk to this business, as is the case with all the other brokerage houses, wealth management and asset management companies, is that the earnings are very sensitive to a decline in capital market sentiment. So if and when we do have a bear market in future, you'll experience a valuation derating in all the capital market plays.
But a big valuation gap between Nuvama Wealth and peers like Anand Rathi. Anand Rathi 66 times and Nuvama Wealth is what, late 20, you said 28, 29?
29 times, yeah.
And this is
29
after the
times.
stellar rally we've already seen in the stock since the time the demerger happened from Edelweiss and then the listing happened. So definitely a big valuation support is what we are seeing. And these stocks have already run up so much. Like the broking companies, some of these wealth advisors have seen a one-way rally. For instance, Anand Rathi Wealth as well, a big surge is what we have seen here. Gautam, I wanted your take on Insecticides India. This is a space that I track very closely as well. And all we can talk about is the pain that we're seeing in the agrochemical space, the inventory destocking which is happening globally. What makes insecticides a pick for you?
So, Sonal, Insecticides India is a play on the revival of the domestic agrochemicals market. Currently, channel inventories across the distribution network are pretty tight. And this is because monsoons have gotten off to a pretty good start in India this year. And the agrochemicals market is finally stabilizing after a prolonged period of declining prices. And this particular company, Insecticides India, has discontinued several of its low margin generic products. And now the management is focusing on the new generation patented products under its Maharatna line. So the Maharatna range of higher margin specialized products constitutes 64% of the trailing 12-month revenues of the company. And the company plans to boost this proportion further to increase margins. The company has guided for an increase in its EBITDA margins from the current levels of 10% to 12 to 13% over the next 2 to 3 years, primarily driven by higher sales of its Maharatna products and backward integration at its Dahej plant. And at the current price levels, the stock is trading at a one-year forward PE multiple of 15 times, which is at a significant discount to its other listed peers like Dhanuka Agritech and Rallis India. So I think there is scope for valuation re-rating even from here. However, the key risk in this business, as is the case with all agrochemical companies, is that the fortunes are heavily linked to the monsoons. So depending on how the monsoons play out over the next 1 to 1.5 years, you'll basically get the earnings growth from this particular stock. And as a standard disclosure, Stellar Wealth Partners India Fund and Complete Circle Stellar Wealth PMS own both Nuvama Wealth and Insecticides India and their client portfolios.
Just a quick follow-up on that, Gautam. You know, the biggest player in the agrochemical space, UPL, it's trading at the cheapest valuations, I would say, in the agrochemical space. You don't think that could be a good bet now that we are talking about an industry-wide revival?
Definitely. So basically, in case of UPL, like you mentioned, Sonal, it will benefit from financial leverage as well. So along with operational leverage, it will benefit from financial leverage as well because they do have debt on their balance sheet. So, but we don't cover UPL right now. But yes, that could be a very interesting play. Depending on your risk appetite, you could also have that as part of your agrochemicals basket. Not a stock recommendation, but definitely, the more leverage companies tend to outperform. They're more solid balance sheet peers during an industry upcycle.
Got that. Thank you very much, Gautam, for joining in. The disclosure will also come up for you on your screen. He is recommending Nuvama Wealth and Insecticides India. We'll get into a break.